Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome to another episode of the Tech Behind FinTech. This is our first live episode of the new year, and I'm happy to be here. Joining me is my guest, Stefania Di Bartolomeo. Did I get that correct?
Namdi, thank you. It was perfect. Happy to be here, and Happy New Year to everybody.
Happy New Year. Stefania is the CEO of Physis Investment. Today, we're going to be talking about unlocking the future of sustainable investing through AI. Before we jump into the episode, we just have to do some housekeeping. This episode will be streaming from Facebook, LinkedIn, and YouTube. Without further ado, let me introduce my guest, and then we will jump into today's episode, which I'm excited to talk about. Stefania founded Physis with the vision to bring greater transparency to the financial industry and empower investors to measure the impact of their investments. As CEO, she has developed Physis from an idea to an award-winning data hub and wealth management platform. Prior to Physis, Stefania was one of the youngest impact investing fund manager in Europe, which is where she developed her skills as a global portfolio manager. Stefania is also a university lecturer, board member, and two-time author on sustainable finance. Wow.
Thank you. It shows that I'm getting older, I think, for all the things I've done so far.
It's an amazing body of work. You know what? Today's title is Unlocking the Future of Sustainable Investment Through AI. You are the second sustainable company that I had the pleasure of interviewing on this platform. The first was Ben Gleisner, CEO of Kogo. We did a show last year called Climate Change Matters and Banks Can Help Solve It. Guys can look up that episode. We probably put it in the show notes. Then the question I have for you, why sustainability?
It really matters the way we invest our money, because there is an impact. Every time we make an investment decision, there's a long-term impact about what that money will create and generate. So sustainability is the way to go. We know all the challenges that the world is facing, from inequality to resource scarcity. And investing with a sustainability perspective enable us to really build a future where all the challenges that we are currently facing somehow will be resolved, or definitely there will be a better future for us all. So moving money into projects and companies that can help us develop and build a better society is key.
I worked in finance and fintech for over 2 decades, in investment banking and various hedge funding and a couple other things. And the most important thing is always the money returns and figuring out how we can do that. Where did this initial passion for sustainability derive from?
My personal, or you mean my personal path?
Yeah.
I grew up in a beautiful region in Italy that it's a national park. So I really felt this need of protecting the environment. And growing up, I saw how much pollution we were generating. And by sailing in the ocean, I saw that we were surrounded by plastic. Or walking the street of New York, I couldn't really breathe clean air. It's all pollution. It's all polluted. So I started thinking, okay, what is the solution here? Is it me going on the street and protest? Maybe. Or it is me figuring out a way to move money into companies that are not polluting or trying to pollute less. It is me helping move investors' money into something that can really create new solutions so that we are not polluting and we will walk New York streets feeling, oh, wow, this is fresh air. So there is a better future that it's waiting for us, and we should act today in order to make it happen. And in order to make change happen, we need to move money into the right projects and companies. So this is the inner reason for sustainability, and my inner drive started from where I was born, a beautiful region in the south of Italy where there is no pollution and where air is fantastic to breathe.
So I was born in Brooklyn, New York, and so the funny thing about you just said that if you're, I guess, right, if you're coming from a place that has no pollution, basically how you described it in Italy, if you come to New York, I gather how you can see the difference. But if you're in the city, it's just another day. But that's awesome. So the next question I have for you then, right? You grew up in this beautiful region. It's clear, like you see water, great air and stuff like that. You get passionate about sustainability. You see, okay, plastics, how it could start impacting this beautiful region. How do you now, in your path of seeing that, how does the merge of finance come into place? Like, are you in university thinking, okay, I'm majoring in finance, I'm doing all these things, and somehow I'm going to tie sustainability into it? Or is it one of those things that once you're already knee deep in the field, then you start seeing the synergies?
It's a little bit of chicken and the egg problem here, but so this is what happened to me. After graduating from high school, I started to study finance, and I loved it. I really did, because I'm a quant by nature. So I love all the calculation, all the market correlation analysis I was doing. But then I knew that I needed to find a bigger purpose than just making money. And somehow something clicked, and I realized that finance holds an enormous power to shape the future. Okay. And if I were using that type of power that finance, the financial world has, to build and shape the future that we all deserve and we are dreaming of, then that would be the amazing combination. It just clicked to me. So inner drive and the passion that I was building by studying finance and all of a sudden combined, and I saw a vision, and I saw that if I were able to enable people, if I were going to be able to enable investors to see this and to give them the tools to move money into the right way, then we would really make a difference in this world.
That's amazing. What, with this thought process that you have, and you said, okay, I can enable investors to do this, it didn't seem popular. So what type of pushback, what type of did you get? Like, how challenging was that?
It is still challenging. It is still challenging. Is if even today, when you go and study finance, you learn everything that is based on two parameters: risk and return. Risk and return. Okay, all the portfolio correlation analysis are done basically on risk and return. And there is not another dimension that really needs to be added, which is sustainability or the impact that money have. So it is still challenging, although it's slightly easier today when you talk to the younger generation, because they feel the need of making a change happen in the world right now. We all want equality. We all want a pollution-free planet. It is challenging, and it even was challenging for two reasons. Number one, culture. So for people that have been doing finance for decades in the old way, they couldn't really see the need for adding extra financial consideration into the portfolio construction or in the investment thesis, number one. So it was a cultural problem. And second, it was also the problem of how do we do this? Where do we find the data? How do we incorporate this information? Is it even worthwhile to do it from a risk or return perspective? So two main problems I face into my career, and I want to say those are things that still happen. We still need to address the need of changing the culture of current investors, and also enabling investors who want to do this to do it in the most proficient way. And this is also why then, after being a fund manager and facing firsthand the challenge of how to do it, I have come to the realization that through the company that I built, I was going to enable more investors to invest sustainably by giving them the information that they needed.
And can you describe that transition, right? Because I'm like, you're a fund manager working for an organization, right? You're doing that. You have to now introduce that concept of sustainability and say, listen, we're not seeing the full picture. You're getting a lot of pushback because they're like, okay, number one, risk and return. Number two, let's say that we did want to pursue this. We don't really have the data. So looking and trying to find the data becomes a Herculean challenge in itself. Is it even worth the time and effort to spend chasing that data when we have other priorities? So you have to then do that. And then after that process, right, you now transition and you go, you know what, I can do a better job at my own fund, and you start Physis. So can you describe that whole story?
Yes, absolutely. So number one, when we were building for the first time sustainable strategies and building portfolio, integrating sustainability data, we didn't know what to do. We were literally pioneering this for the first time. And so as everything, you try, you learn, you attempt, you pivot. So we really did that. And I remember in my first days as an analyst and then as a fund manager, what was key was always talking to peers, was talking to colleagues at my company, at other companies to say, hey, what do you think about this? How have you analyzed this? What do you believe if we put this into the portfolio, what is going to happen, not in the next week, but in the next 2 months or 3 months? So as everything that is new, you can make change happen only if you talk to other people, if you put yourself out there and say, hey, we want to do this. What is the best way? So confrontation is always key, especially when you're pioneering something for the first time. So that was the first step. The second step, as I was building more and more portfolios, I came to the realization that the biggest need was sustainability data. So in a world where there are tons of so-called ESG scores, for real investors, an ESG score, it's not enough. It's not enough to justify an investment. It's not enough to assess a risk. It's not enough to really assess the impact of that investment. So there was a need behind that ESG score that was already public available from different sources. And the need was for raw data. The need was for detailed information that in a way are so simple. So think about this. If you want to invest in Adidas or Nike, ceteris paribus, when it comes to financial information, you want to see which of the two companies has recycled more water, or which of the two companies had less workers who got injured during during work. You need to access that information, and you don't need a score. You need the real information. And I came to the realization that my ask for more information was commonly shared by all the other individuals that were out there trying to assess and build sustainable portfolios. So that was the shift that drove me to start Physis. I realized that if we really wanted to make sustainability happen and we wanted to get to the next level of sustainable finance, we needed to access more detailed and objective information to build better portfolios. And again, I decided one day that I wanted to build that. And that's why I started the company, which you are naming it right, because the original name, it's Physis, which comes from ancient Greek and means the word of life on our planet. So it identifies everything that is alive on the planet. So Physis Investment reinforced our mission to invest respecting everything that is alive on the planet. But then what happens generally also, especially in America, things get slightly changed. And so people mostly refer to us as Physis. But you were saying it right. The original name is Physis, at least the original name from ancient Greek.
But all right, so I have it correct. So I want to make sure I have it correct now. The name is Physis.
It can be pronounced both ways. Like Americans like to pronounce Physis. but the regional, it's like espresso and espresso, right? Like it's the S and X. But yeah, it's fine. Like I also quite often refer to my company as Physis because it's the same root of physics. Physics is the law of nature, and Physis, like Physis, is everything that's alive on the planet.
Got it. Okay, cool. I just for the audience who might not understand, ESG is environmental, social, and governance investing. You mentioned that.
Yeah.
Okay, really, really interesting stuff. So, if I could summarize, right? You're working as a fund manager of a company. You're trying to find this data. As you're talking to other colleagues, they too are having a similar challenge in terms of we want this data. We want to present it to our investors because that might make they might make a certain investment decision based on the sustainability practices of an organization, right? Because depending on how you treat your workers, depending on are you dumping in your carbon profile, all these things make a difference. It could impact, obviously, some people may look at that. It could potentially impact the bottom line, but we don't have that data. You see a gap there, so you start Physis or Physis to address that. Now, in doing that, now you're actually become the data provider, right, for various organizations in the field and other fund managers. Is that accurate?
Exactly. We enable asset managers, portfolio managers, wealth managers, analysts to immediately access all the information they need to better assess their portfolios or make investment decision. And it's such a broad spectrum, the information that we offer them, that refer to them just as ESG is a little limited, because we can go from anything from how many people might have died at a company site to what has been the audit fee paid by the company to its auditor, to water or any type of resource management data, to even how many iPhone a company has produced and how much recycled material was in each iPhone. Or phone, and then iPhone is just for Apple, but for any phone. So think of Physis as this huge digital library that enables investor to access all non-financial information that yet have a financial correlation.
How have you seen that? So, based on this information, how have you seen that impacting the bottom line of the portfolio companies? Can you give like an example in which I'm trying to analyze two companies? I get this sustainability data, even extended past ESG, as you just mentioned. And, over time, we see that one company is doing better than their competitors based on these practices. Can you give me an example of that?
Yeah, I can give you plenty.
Nice.
I won't name companies specifically, but I can give you an example. So let's take this. If we want to invest in two companies, so we want to have a higher exposure in one of the two companies, and we might have even both in the portfolio, we want to consider efficiency rate, like how much water they have used, how much energy they have used. The company that has used less energy or has generated less water, that definitely has improved its efficiency rate. So their cost of operation will be lower and will continue to be lower in the future compared to the other company. Okay. Or for example, if a company is creating a new product and this product is made with 80% of recycled material, maybe materials coming from plastic that they have taken from the ocean, well, this company is going to perform better in the next few months because of two reasons. Number one, again, their cost of production is lower. And number two, customers will be more inclined, and we know this is a huge trend, to buy a shoe that is made with recycled material than to buy a shoe that is not made with recycled material. So we offer tons of efficiency metrics to really assess what has been the operational efficiency of a company and what could be the risk or the opportunities based on the product that those companies are creating.
Wow, that's really interesting. So now that's for like asset managers. Is that same data in available, or is there a future plan for that data to be available for retail investors? So I'm a retail investor. I have a bunch of. I'm not I'm going with, I choose my stocks or whatever. And I'm like, you know what? I want to invest in company A. I want to invest in this sector. There are a couple of players in this sector. And I want to understand the sustainability practices to really see where I'm going to put my money. Can that impact, can the regular retail investor get that type of information?
Yes, we are working with trading companies, discussing how we can give them data so that they can give our data to their traders. So we are not planning of doing B2C. So we are not planning of selling directly to traders, but we are already discussing with different trading platforms how to integrate our data inside their trading platforms.
Wow.
Okay. And also something very important that we will expand probably towards Q3 of 2025, we're going to start selling our data also to corporation, because Nike wants to know what their competitors are doing. Adidas wants to know what their competitors are doing, and so many other companies. So this is something we will expand in 2025 as well, offering our data and our solution to corporation, not only to investors.
Really, really interesting. I want to ask a question. I'm going to thread lightly because you have your own secret source, obviously. So, stop me or answer what you can. How are you getting this data?
I'm always very happy to answer this question because we are a team of people obsessed with technology. We couldn't do this without the obsession that we have to build the best tech possible. So I can summarize our technology into a few steps. Number one is our data collection. So we've built in perfection a scraping system that is able to take all of the data that we want to collect from company reports and company website. This is very important. We don't randomly collect information from the web. We have built a system that takes data that have been directly published from companies and companies' reports and company website. Okay, and generally over 90% of this information have been also audited. So they have gone through an audit process. So the information is always very reliable. Step number two, we have built AI algorithms for data quality check and data standardization and normalization, because every single data point can be expressed into a different unit, into a different language, sometimes even into different time frame. Let's say that one of the basic data points that we collect is CO2 emission. So one company might report CO2 emission per year. Another company might report CO2 emission per month. So we create a normalization of the data point, and we also uniformize the units. Some company might report CO2 emission in metric tons. Some other might report CO2 emission to another unit. Or as we cover 14,000 companies globally, we have to deal with different languages. So we, of course, have to translate from different languages. So that's the hardest piece of our technology is all the data quality check. And think that we do this over 95% is completely automated. So we built a system that automatically extract the data, normalize the data, correct, see if there are outliers, go back through picking up the data again, and is an automated process. The third step is what we call AI estimation and AI forecasting. So we do an estimation for missing data point in the past. Not all companies might report data. So we are able to create an estimation model with AI considering peer analysis valuation. Peer analysis made by companies in the same sub-industry, in the same region, and of course, almost of the same size. And then we also do AI forecasting to predict what we think can be the CO2 emission of a company over the next 3 years. Then the first step of our technology is what we call a data aggregation. So you might go on the platform and simply ask a question. What is the company that has generated more CO2 emission in the S&P 500 last year? Okay, that's a simple question for you. It's a calculation that we automate in the back end, and you will see in the front end of the technology. As well as you can quickly search for funds. So we calculate every single data point at a fund level with, of course, a full fund look through. I hope I was simple. Anyway, we have 4 steps of the tech.
Can you break that down in terms of, you said you calculated at a fund level? Just can you help explain what that means in terms
Yes,
of
of
calculating?
course. Of course. So you can have information at a single company level. So you only want to know what has been the percentage of recycle done by Nike in 2018. Okay. Or you want to know what has been the percentage of recycle for all the companies in the S&P 500 or in the MSCI World or in the Nasdaq. Okay, so and we do it by index, we do it by fund. So you can access the same data point at a company level, at a small group of companies, it can be some industry peers or for an entire portfolio.
I mean, what you just described is pretty amazing. How you're leveraging technology to get this insight on sustainability on from a company level. You can look at it, like you said, from a fund level and so forth. Totally amazing stuff.
Thank you.
So,
Well, we have
so
spent tireless nights developing the technology, and sometimes we got stuck for small things, and then like for a week you get stuck and you cannot figuring out the solution. Then all of a sudden we come back fresh on Monday and like, oh, it was that simple. But it's a lot of work. It's a lot of reiteration. That's why sometimes people are like, oh, we're going to build the same technology. I'm like, go ahead. It will take an enormous amount of time and try.
one of the things that we see, especially with this AI revolution, is that data is king, right? Garbage in, garbage out. You put the great stuff in, you get great stuff out. And I was in looking at it. It's a lot of public data. Do you see Physis becoming, well, I guess that's you kind of answered my question. Do you see other LLMs in the future leveraging Physis to collect this type of sustainability data?
Oh.
Like right now,
Yeah.
take ChatGPT, right? Has access to a whole bunch of public information. Sometimes the in looking at certain things where the industry is going, they're seeing LLMs looking at private data, and those private data sources become the gold standard. And now other companies can have built their own models on top of
Okay. Well,
yeah.
well, this is how I see it. I believe right now you can leverage Gemini, you can leverage ChatGPT technology to build or to facilitate the development of your own project. It's a little bit like AWS, architecture. But how you mix the tools, what is the end goal that you have, and how you develop that end goal, it's what really makes the difference. So I don't see the future of Physis as a technology that will enable other people to access the data. I see more of Physis as the technology that will enable people to get the information that they need right away to build portfolios, to do market correlation analysis. For example, something that we will keep expanding is private data companies. So right now, we cover 14,000 companies globally. All companies are listed on the stock market, either in Japan or in Germany or in the US. But we also have data for 355,000 funds worldwide with a look-through analysis. What we want to do in the future is also to expand our data coverage into private companies. So companies that are not on the stock market. In full transparency, we have even attempted to do that type of search, and the results were not great. And this is due to one simple reason. Private companies have not yet developed sustainability reporting to the level that listed companies have. So the information that we were able to extract, and when we were processing the data quality check, we find a lot of inconsistencies, and we couldn't really progress into giving our investor proper information. But even in this little space, things are changing. For example, in Europe, there is a new regulation that is making mandatory, I think, for all companies that have over 500 employees or 250 employees, one of the two thresholds, I can't remember right now, to it's mandatory for those companies to have a sustainability report. This will increase exponentially, for example, the information that we can start collecting. And we have completely automated, we call it airflow, the airflow of those data collection. So the moment that data is available, or 1 week later, you will have it on the Physis platform. So again, going back to your question, I don't see in the future of Physis as an architecture or a platform that people just like AWS or ChatGPT can use to build their piece, but more as a platform that is able to collect this information, clean up all of that information and give it back to investor. And this is very important, the cleanup. Because when you go on ChatGPT, you can ask a question, the information can be randomly scraped from the web, the data is not verified, and I'm pretty sure that if you ask the same question to ChatGPT today and tomorrow about the same data point, because the source of the data point is so different, it will probably give you a different answer. For us, the second step is key in order to provide reliable information. We take information from company reports and company websites, so audit reports, audit sources, and then we do the data cleaning, we do the data quality, and then we can give it back to investors. So the second step is so key that just leveraging the technology on step one wouldn't be enough for our clients to be satisfied. Again, these are professional investors; they need reliable information.
Yeah, like when you were talking about like the 14,000 companies that are publicly globally traded. I mean, they have to be audited. They have their annual reports to their investors and so forth. So getting that type of verified data, then going through your process and normalizing it, you're more confident in that data versus private companies, unregulated. That their data, until certain regulation comes out in which they have to report certain things, it becomes challenging. I want to go over some stats that I found. I found it online, so it might not be 100% verified, but let me add it in and we can kind of go through this. ESG related institutional investments are expected to reach 33 trillion by 2026, which is a 21.5% share of assets under management. I want to go over these stats and just get your opinion on some of them, and just talk to you if you've seen similar and your thoughts on it.
Yes, this is a huge. There are even some projection from Bloomberg, for example, that we're estimating by 2025 over 42 trillion. So these are estimation that I believe we are going to meet because the trend keeps growing. So institutional investors worldwide, from Japan to the US, are moving towards sustainable investing. And retail investors are doing the same. Additionally, there is going to be a huge shift in the generational wealth. So the millennials are going to inherit more generational wealth, and they want to invest in accordance with their value. They want to invest trying to really eliminate pollution, trying to reinforce equality in the world. And that can only happen through sustainable investment. So I am very positive that this is going to be reached 33 trillion or 42 trillion. We will see. And also very, very important, Asia is waking up on ESG.
That's interesting. Next, right? 85% of investors believe ESG investments can lead to better financial returns and build resilience. 89% of investors considered ESG when making investment decisions. That's a huge number. That's close to 100, right? What are your thoughts on that stat?
It is very high. So the first one, it goes as simple as this. When you need to make a decision, whatever decision you have to make, one thing is that you consider 3 factors for this decision, and one you consider 5. The more information you have access to, the more you can make an informed decision. So you will be better into assessing risk and opportunities. And this goes the same way with sustainability. Financial data is not enough anymore to outperform or also to fully assess the risk and opportunities of any investment. And investors know this, and they're learning the opportunity of expanding the analysis to extra financial information or to so-called ESG data. So that's the reason for such a high number. And then 89% of investors want to make investment in ESG is due to mostly the fact that new investors are coming, like the millennials are coming and are having the opportunity to invest their money or to invest the money they have just inherited, and they want to invest just like they buy recycled shoes, or they travel and do sustainability traveling, so they want to invest in accordance with their belief.
This is something I know because of your 14,000 companies you have a familiarity with. This next stat: 90% of S&P 500 companies and 70% of Russell 1000 companies publish ESG reports.
I think that percentage is honestly higher. It's honestly higher, and also sometimes companies create one single report that it's financial and sustainability. It's called an integrated report. This shows how much sustainability information are now integrated into the overall financial statement of companies. Because honestly, we cover all 100 companies, and for Russell, we are at 98%.
That's good. I love this, what we're doing now. I like these stats, but I like checking it with some experts and going, this is really cool. Consumer views: 83% of consumers believe companies should shape ESG best practices. 76% of consumers say they would stop doing business with a company that doesn't follow ESG principles.
Exactly. And this goes back to the principle that I was telling you about why an investor should integrate sustainability information also specifically to what type of product companies produce. Again, if we go now and see that one of the biggest producer of airplane, for example, is creating an airplane that reduce emission, of course, that specific brand is going to have a huge market share opportunities in the coming years, because all airplane companies want to reduce emission. And this is like, it's a large scale consumer, but it's the same thing with shoes or everything else. So absolutely.
Next, company priorities. 94% of executives feel pressure to prioritize ESG initiatives.
It is true. And let's remember that ESG is not, sustainability is not just environmental. So there is an S and there is a G. S stands for everything that is social, it's equal opportunity, it's fairness, it's having equal salaries for women and men, having the same position at the company. G stands for everything that's good governance, from independence of board members to audit fee fairly paid to the auditor. So it's just best practice, and executive feel this pressure because investor put pressure on them.
Something that obviously your company found a gap in. Research shows that companies are falling short of their ESG targets due to lack of data availability. What are your thoughts?
It is very important. So there are two things here. Number one, companies are starting to write down commitments towards ESG targets, but most of those commitments are extremely broad. So they'll be like, oh, we're going to reduce water consumption by 20% in the next 5 years. Okay, but that's just a commitment, doesn't really say how and if they will achieve it. If they won't achieve it, what is going to happen? So that's something that is happening. Some companies are reporting commitment or targets, but they are too broad to be believed by investors. The second reason is also that there is a lack of data, even at a company level, because maybe a company has only started today to start monitoring their water usage. So of course, if with only 1 year of monitoring of their own water usage, they cannot really predict how long it was going to take to improve that specific segment of company operation. And so it's a little bit, again, the chicken and the egg problem. But the most important things that we need to really believe is this is happening. So 5 years ago, we wouldn't even talk about this stuff. Today, we're talking about it. In 5 years, I'm sure that all companies are going to have very clear targets and all the data is going to be available for them to make assessment, also for their own prediction, and for investor to really assess the quality of a commitment of a company.
Oh, some other stats here. The ESG investing market is expected to grow at a compound annual growth rate of 9.4% from 2023 to 2032.
Mm-hmm. I assume even more if the SEC is going to push further the regulation on CO2 disclosure of portfolios and maybe add a little extra, just like the European Union has already moved more regulation on sustainability disclosure. Because again, there is a huge movement happening here. There is the demand from investors, but there is also the regulator. Asian regulators and European regulator have already created new regulation called SFDR, PAI to push sustainability forward. We let's see what is going to happen in the US, but SEC has already moved some steps into that direction.
Global spending on ESG business services is projected to reach $65 billion by 2027. I know this is a number that you are familiar with, more or less.
Probably, absolutely, yes. Consider that right now, even a medium-sized, large-sized asset manager spends over $1.5 million just on ESG data. So the most important aspect that we will see is not just the large institution, but also the smaller and medium institution will have to start adopting more and more sustainability data and sustainability services. And so that's why that increment by 2025.
Inflows into sustainable funds increased 1,400% from 2018 to 2021.
Yes, this is true. And we have also to be honest and say that there was also a deflow over the last few years, mostly due to the fact that sustainability funds haven't performed greatly, considering all the war that are happening. So the money flowing into sustainable funds, unfortunately, have decreased from 2021 to today. Because there's been more investment into armaments and weapons, which is generally against any type of sustainability investment strategy.
Wait, I'm sorry. I want to get that. There's been more investments in what? Did you just say?
Into everything that has to do with the war. So building. Yeah. Okay. Protection, weapons, and other, unfortunately, other type of investment. So there's been a little bit of a deflow into sustainable funds that have also slightly underperformed.
A couple of questions, right? And for the next years. How can smaller investors or companies without significant resources leverage AI for ESG reporting?
Okay, so like a small corporate.
Yeah.
There are other companies, not Physis, but there are other companies that were born with the idea of helping corporates report. I don't feel like giving a few names because I feel terrible like to give few names instead of others, but there are so many good companies out there that were born with one mission to help businesses report on their sustainability data. And also there are specific frameworks that help you report on your sustainability practices. One is called the GRI, is the most commonly used framework. So any type of business owner, considering like at least a 250 company size, can take the GRI framework as a reference and start drafting their sustainability reports out of the GRI.
You said GRI?
GRI, Global Reporting Initiative.
Global Reporting Initiative. Thanks for that.
Sure.
Last question, right? What advice would you give to fintech startups looking to integrate AI with sustainability?
So today you cannot really build any technology without AI, but you really need to understand what is the AI that it's meant for you to help you achieve the end goal that you want for your business. And also maybe start developing something using other people AI, and then you develop your own. Otherwise the cost will be too high.
Got it. Amazing conversation. I asked my guests, and so we're gonna get a little more on the personal side. And throughout the conversation, you touched on it, but I want to ask you directly: What is your why?
My why. I sincerely believe that there is a way to build and to build a better future. There is a way for us to get rid of the pollution. There is a way for us to build a world where you don't get judged because of your race or because of your gender. And that can happen only if large organization and institution adopt sustainable principles. In order to do so, we need to invest money into those companies in order to, number one, make the transaction happen, but also to enable those organizations to continue to sustain good operation. So my big why is that I really believe this is one of the key aspects for us to continue to evolve as humans and to continue to build a better society. And I find my little niche. My little niche into this big vision is enabling investor to access information they need so they can really make informed decision.
To say this conversation was inspiring. No, seriously, like I've always found it extremely amazing to talk to people who have a belief in something, right? And sometimes that belief may not be aligned at the time with what they're doing professionally. And when they figure out a way to create that synergy, it's like magic. Because listen, 20 years ago, I mean, it's for me, right? I started working in finance back in '01. This was not even a conversational topic like, at all. Nobody's even talking about this, right? So, just having these two abstract, like people will say, "Oh, you're a tree hugger and you're into
I am
the,"
a tree hugger.
but having these two uh, now it doesn't seem like opposites, but at the time, total opposite things coming together and building a business from it, and then also now being on the forefront of changing the culture, changing the mindset, talking to getting this information from publishing companies around the world and making it a thing. Obviously, we looked at the stats, we see where it's going, but sometimes when you're going on this journey initially, those things are not clear, right? And it becomes clear later on, but initially. So, totally inspired by this conversation, man. I find it really fascinating, and it just makes, no matter what, if you're thinking to do something that could be could impact others, sometimes you say, okay, I'll do that later on, or I'll do that when I do the other things that can make me a whole bunch of money, and then I'll donate to something. But to create the synergy while in your business pursuits, I just find absolutely amazing. One
Okay.
No problem at all. The thing that we do at the end of our
And
show.
I'm a real believer, by the way, because you have no idea how many times I faced no, or how many times people were like, "What are you talking about?" Like, and then, but the good thing is, if you pursue, and then if you technically speak to people and explain how this can make a difference, how can it help them into their job, then people come back and say, "Oh my God, you know what, you were right." So in many ways, being a pioneer means that you have to face a lot of no, and sometimes people might even not take you seriously, but then time will tell. And I think time is telling us that this is happening. Sustainability is here to stay. We all see the need. We just need to make sure that we can act on it. And just as you said, not one day, but yesterday. Because you wanted to breathe polluted air. No, you want to breathe clean air. And maybe you want to go and see the Hudson River clean, not gray.
Yeah, I mean, I just want to
That
get
future
to
is possible, right?
you know, um, it's funny you say that because a lot of people, I think you see people now that the New York that I grew up in is a lot different than New York now. It's a lot more people transplanted in, and they might go, oh, the air here is not that good, but when that's all you're used to and you don't see anything different, right? Then that's what you're used to. But I just think it's I just think it's awesome what you're doing. I mean, that's why I definitely wanted to have you on the show. I like to have more sustainability people on the show. I mean, the last sustainable conversation I had was last year, so it'll be good to have more. So it's totally awesome. You know, we're at the end of the show, but I would like to one day get into those no's on the different interviews and how that process went to really dive in that that type of rejection for doing something that most people are not at the time are not taking seriously. What we do for our guests at the end of our show is we're going to give you the platform to let people know how to find you, anything that you want to talk about regarding Physis, and just different things. So we're going to give you that time. I'm going to get off stage and let you do that.
Okay. Amazing. Please reach out. We are always happy to hear ideas, stories. You can email us at physisinvestment.com. You can go on our website, physisinvestment.com, and also subscribe to our newsletter. That's the best way to get all our updates. And something great is coming soon. So do sign up to our newsletter. Thank you.
Stefania, amazing interview. Thank you very much for your time. To our guests and our viewers, thank you very much for watching. We really appreciate your viewership. As we say, whether you're watching it live when it airs, whether you're watching it the next day or the next year, we really thank you for watching and all the different messages. On that note, stay tuned for Tech Behind FinTech. It's going to be a great year for us. We have a newsletter we're starting, so definitely hit the website and subscribe. We launched our new platform a few months ago. We feature FinTech CEOs on our website, as well as the current news in the FinTech industry. So definitely go to the Tech Behind FinTech to check all those wonderful things out. And on that note, you can catch us Friday live, 12 p.m. EST every Friday. We are live, streaming live on YouTube, LinkedIn, and Facebook. So those are my plugs for the show. And to all, when you're watching this, it should be your weekend. So have a great weekend. And on that note, we are out. Cheers. Stefania,
thank you so much. It's been a pleasure. Thank you.
Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.